Well, we have no haters to talk about, so let's start on a high note. Well, first of all, how'd GDP come in? First quarter GDP, we got to touch on that.
2.3% of GDP. Analysts are expecting 2. It's obviously a dip from the 2.9 in the fourth quarter, but since the credit crisis, the first quarter has traditionally been the weakest one. So it's not an unusual thing. It's actually strong versus the relative strength of it versus the fourth quarter versus past years. The negative part was the 1.1% personal consumption expenditures, which is why the 10-year yield's now back down below 3%. So that is people spending, obviously, what they expend on consumer goods. And that leads into lower inflation, not higher inflation when they're spending less. So it's pushing yields down, and initially was pushing the stock market down as well.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 117 of the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. This episode is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a conversation of news and the markets.
Well, there you have it. We got a lot. See my breaking headline. Did you see the first article that was actually published? This is it's Scientific American or something, but this is very important. Scientists finally confirmed that Uranus is surrounded by fart clouds, but the cold would kill you before the smell did. They actually published.
They didn't post that. Is that in The Onion?
No, I'm serious.
That's insane.
I am absolutely. So we now know that Uranus has sulfur fart clouds around it, but you'll be dead long before Popular Science. It's actually, that was the headline for Popular Science, not Scientific American. Popular Science. It's in their space section, and it's an official published article.
Hey, can I touch on Crude? Because Crude is actually my why. So I found it interesting that we got two surprise builds in inventories, both in the API and in the EIA. They both were expected to be draws on inventory, and they came in as builds. And yet, crude oil on a weekly basis is, let's see where it is right now so that I'm being accurate. Crude oil from the start of the week until now is up 4 cents. That particular data should be bearish in normal circumstances. So I want to go into the why of why it has not been bearish. Neither has been bearish. And it's kind of three main reasons. Number one, the collapse of Venezuela's production continues to accelerate. And this week they arrested 2 Chevron employees. And the charges were corruption. But according to the Reuters article that I saw, people are saying on the ground that they were just arrested for refusing to participate in corruption. So they got arrested, ironically, on corruption charges. So that means the foreign producers may pull out if that kind of thing is happening. They haven't announced it yet, but they may. If they do that, Venezuelan production goes from about a 400,000 barrel a day deficit to their normal production to about a 1.4 million barrel a day deficit, which can drive crude oil a lot higher. Then on top of that, we have the tension between, well, there's a war in Yemen, but that war is really between Saudi Arabia and Iran, 2 heavy hitters in the crude oil producing region. And obviously Saudi Arabia is a U.S. ally. The U.S. is deciding on whether Iran has been compliant with the nuclear deal, and that's the fancy way of saying whether we're staying in the deal or not. And that decision has to be made on May 12th. I think you look at the proxy war and you look at President Trump's opinion of Iran's government, and I think it's leaning likely that we pull out of that nuclear deal. That will take another 400,000 barrels of oil off the open market pretty much immediately because the old sanctions come back into play. So that's number two. And then number three comes from the EIA data. While crude oil supplies grew this week, the refinery utilization rate fell. So simple terms, refineries pulled crude oil out of inventory and they refined it into product. Well, the refinery utilization dropped. That means they were pulling less crude oil. That is one of the telltale signs for people who are not in physical crude oil, don't work in refineries, to know that refineries have entered what they call turnaround or maintenance, where they retool sections of the refinery, in some cases the entire refinery, to produce summer blend gasoline. So when that happens, there are builds, and the markets are notoriously bad at predicting when they start, how much turnaround is going on. So you get a lot of like misses on the estimates versus build and draw on these numbers. So it was very important this week to look at the refinery rate, and it went down. So the fundamentals for crude are generally bullish. What can make crude go down? Well, it would be the end of the seasonality of crude, which has to do with refinery turnaround. It could be peace in the Yemen conflict, which is not likely to happen. It could be we deem that Iran was compliant, we stay in the nuclear deal, not likely to happen. Or there could be some sort of slowdown in demand because the global economy is perceived to be shrinking because of a trade war. Any of those things, all of which I believe to be low probability. So my why this week, as well as my crude oil section this week, is all about that the fundamentals of crude oil are probably more bullish than just what shale production tells you.
Anything with earnings, Bob, this week? We had Alphabet, we had Amazon, we had Facebook.
Yeah, they were all pretty much good, weren't they? Did I miss any of them that were bad? I mean, Facebook crushed it.
Alphabet, we'll start with Alphabet. Earnings per share $13.33, estimated 9.3, so it blew it out. Alphabet first quarter revenue ex-TAC $24.9 billion, estimated 24.3. So, and the number of daily users. That was for Alphabet. Then Facebook reported a quarterly earnings and revenue well above expectation. It made more ad money from each user despite those recent scandals. Their earnings per share was $169 adjusted versus $135 expected. 11.97 billion versus 11.4 billion expected. Daily active users 1.45 billion versus 1.45 billion expected, so that was right on. Monthly active users 2.2 billion versus 2.2 billion expected. So, and a year ago they had adjusted earnings per share of 104 and a revenue of 8.03 billion, so they are up over the year. Amazon revenue 51.04 billion versus 49.78 billion, so that's a 1.5 billion bump up over expectations. Earnings per share $3.27 per share versus $1.26 per share as estimated. So they destroyed it.
Amazon is going to be the first $1 trillion company.
Amazon now their AWS revenue was 5.44 billion versus 5.25 billion. So that came out their web services and everything else, which is one of their big money makers. And their web services sales grew 39% year over year. So that was re-accelerating its growth rate because before it came in like at 42% in the third quarter of last year. That was good. Oh, and in the company that it did not do well, in my going to zero, Deutsche Bank. So this was Germany's biggest bank reported its first earnings under its new CEO, and they missed across the board.
Wow.
Q1 net revenue missed the lowest analyst estimate, coming in at 6.98 billion, down 5% and below the estimate of 7.27 billion. Also missing the low end of the range, which is 7.12 billion. So summing it up, Deutsche's pre-tax income more than halved to 432 million from a year prior, missing average analyst expectations by almost a third and resulting in a paltry 120 million in average profits, a 79% plunge year over year.
Wow.
That hurts.
Yeah, that is
so
bad.
They are going to, I think they're pulling out a lot more stuff Where is this? The bank announced a sweeping restructuring plan, abandoning ambitions to be top global securities firm, scaling back U.S. rate sales and trading, reducing their corporate finance business in the U.S. and Asia, and reviewing its global equities business with a view towards cutting it back. There'll be a significant reduction in the 97,000 person workforce this year. We don't like to see that, but we've talked about this way before this happened.
Yeah, I mean, they've been in our going to zero category for a long time.
And they're trading not yet close to zero, but they're trading 1385, massive gap down. They were trading at 1480. So that's in your Deutsche Bank segment. Oh, just checking in. Blue Apron, $2.10, because that's in my going to zero category.
So news in Europe, ECB meeting this week. The statement that the ECB released was essentially exactly like the last statement. It was almost unchanged word for word. So obviously we always wait for the press conference anyway. Draghi has the press conference, and he continues to repeat the same two phrases over and over again. But you can see from the reaction of the euro, which sold off, it hit home one more than the other, that growth would be solid and broad-based, and would continue to be solid and broad-based, and inflation remains subdued. So the interesting thing I found about all that, because the euro sold off, initially it spiked, and I thought we were actually getting a market reaction to where people think because growth is going to be broad-based, and he did express confidence that inflation was going to recover. I think maybe he stressed that the EU economy needs the stimulus a little while longer, and they would keep it in place as long as they could. So I really liked that. I really liked the way he said it. And the market liked it as well, because the euro sold off, so the market took his words very seriously. Now, having said that, the one thing I thought was interesting about this whole exercise was the Draghi is looking for inflation. Our Fed is looking to normalize. It's almost like the U.S. Fed very rarely talks about where inflation is now, just confident that it's going to continue to move in the right direction. And Draghi does the opposite. Draghi says we are confident that inflation is going to pick up, but he doesn't say they're going to do anything until it does pick up. So I find that very interesting that our Fed, again, is looking to normalize. And we've talked about this before. I think that's what the deal is the Fed wants to normalize policy, and they don't really care that we don't have inflation yet. That's the read I'm getting on that. So that's what I got off of that. This was a very cool comparison between the ECB and the Fed and the way they're looking at things.
You got to be real careful out there, because did you see the popular crypto wallet Mu was hit by a DNS attack, and then they redirected people to a site that looked like it, so people put in their key information, and the guys stole their keys and drained a bunch of people's crypto wallets.
Well, that's just a general rule.
Yeah.
Whenever you're using a web browser, is look at the address, make sure the lock is there, confirm that everything that you can see looks appropriate.
Yep, because it's really critical if you don't have a hardware wallet, like a Trezor or something else, you got to be real careful with those keys, because once you put out your private key, if you put it in the wrong location, you're screwed. And Iran just banned cryptos. They're having, if you don't know, Iran's having a pretty major currency crisis. They're trying to keep their currency from collapsing against the U.S. dollar. And now they've banned crypto trading, because it's just another way for people to get out of the Iranian currency and into something else that so if the reality goes to it's already lost half its value, dropping from 36,000 to the dollar to 60,000 to the dollar in the last week. So people are trying to figure out any way to protect themselves, and they were putting it into cryptocurrencies, but now they've banned that. So what else we have? Oh, we got to talk about Amazon continuing to take over the world. Jeff Bezos style.
Yeah. They're going to pop open your trunks. They're going to pop open your glove compartment. They're going to pop open your car.
Well, now they have their top secret plan is to build home robots. So that was leaked out this week. But their Amazon spokesperson is not commenting on the rumors and speculation. But it makes sense. They've already done Alexa and everything else. So why not just put Alexa into a robot, and then you can tell your robot to go get you a beer or something.
The great thing about America is when you become when the positive karma gets to a certain point, you get crushed. It just always happens, right? And then you can build yourself back up again from your defeat. I will be on the front lines of the Amazon backlash.
The front lines of the Amazon backlash.
Yeah, as soon as there's a legitimate reason to criticize that company, I'll be there making jokes. Because I love that David and Goliath type storytelling.
Well, so we'll have to stay tuned for Stafford's David and Goliath story from
for Amazon. I don't think it's there yet. No,
but now it's interesting because they were the anti-brick and mortar. Then they started rolling out their own Amazon shops, and now they've again partnered with Best Buy. Completely brick and mortar. Well, they still have an e-presence, but it's not big. But Best Buy is going to be selling exclusive in-store sellers of Amazon's Fire TV edition. So they're rolling out the whole Fire TV, and Best Buy is going to be selling it in their brick and mortar shop. This will be a high def and a 4K ultra high def Fire TV edition models from Toshiba and Best Buy's in-house brand Insignia.
I don't think 4K works in the living room because the minute you get about 3 or 4 feet away from any television, 4K, 2K, 480p, your eyes is blurring it together, right? Don't you have for a computer? 4K is great because you're inside that window of distance where you can see the resolution, but you can't get a 500-inch television in your living room, which would give you at a 15-foot distance the ability to see the quality of 4K.
I don't know. I've been sort of impressed with some of content specifically designed for 4K, although there's not a lot of it, and not all 4K TVs are made the same. So, I mean, some of the stuff that I've seen on the LG OLED 4K TVs, that's actual produced 4K content is pretty wow. I mean,
at what distance?
3.6 feet. No.
Right, exactly.
No, I was joking about 10 feet. 3.6 feet. Well, when I sit 2 feet away from my big console TV on the floor because it doesn't have a remote, and so I am the remote.
Yeah. Familiar.
Boy, change the channel. Okay. So I thought that was interesting that the more partnership between Amazon and Best Buy. What else? Amazon. Oh, we did the Amazon. You talked about this earlier, but Amazon's also delivering packages to the trunk of your car. It's in collaboration with GM and Volvo, and will launch in 37 cities. You have to be a Prime member, but essentially, instead of taking it to your home, they will take it to your car, unlock your trunk. You have to have, that's why it's GM and Volvo, because you have to have that OnStar stuff or whatever the Volvo equivalent is. And, they walk up, they hit their little button, it pops open your trunk, and they drop your merchandise off in the trunk, and you get a confirmation. So.
Yeah, that can't. That has no downside, right? There's no downside there.
Well, as long as you're not putting bodies in your trunk. So you better not be like mob member forgetting to get rid of the body before Amazon delivers your stuff. That's pretty much all I had on Amazon. But can we buy all our guitars through Amazon now? Is that what we're going to have to do? Because I see you have a Guitar Center reportedly facing imminent bankruptcy.
Yes. So Guitar Centers has been part of Americana since, the 50s. It started as Organ Center. They sold Hammond B3 organs and organs. Then it became Vox Center. Vox is an amplifier company. And they were great. They were a lot of fun in the 80s and 90s. But they were they were owned by musicians. And whenever I don't know, you get a company big enough, then just a financial institution will buy your company. So Guitar Center has been owned by financial institutions, not musicians, for the longest time now. And they have so much debt, and they're racked with debt. So I can probably expect the $1 billion that they owe, and they narrowly avoided defaulting on their repayments. They're in the going to zero segment.
So they're going to end up like Toys R Us.
Yeah.
So all these companies have been around for a while. Well, not all of them, but some of these iconic companies are, going to zero.
And it's self-inflicted. These are self-inflicted occurrences. It's not like, people don't want to buy drums and keyboards and guitars, or people don't want to buy toys. It's they're leveraging their assets by a factor of 10 to 20 to then 100, and then they just self-destruct.
No, that's the challenge of debt. Well, speaking of debt, that's a good tie-in to Tesla.
Jeez.
This is interesting. This isn't directly about Tesla, but this is the electric car charging technology is about to surge past Tesla's superchargers. There's a huge rollout in this country that's coming with and Volkswagen's doing it. Porsche, Electrify America, which is the subsidiary of Volkswagen, so Porsche and Electrify America, they're rolling out these roughly 500 DC fast charging stations. The systems will provide up to 350 kilowatts of power for cars capable of charging that fast, which translates to about 20 miles of range for every minute of charge. That comes up to 300 miles of range in just 15 minutes. So that's I wonder if Tesla's gonna have to upgrade there, but they don't have cars capable of going up to that 350 kilowatt yet. So we'll have to see if those gonna be on the horizon for Tesla, and what they're gonna do with their supercharger network, because that dwarfs the speed of theirs.
Yeah, the only thing to be concerned with fast charging is if they don't engineer the batteries to take that power load quite small in whatever cells they have. If you put more power into a battery to charge as fast, you reduce the lifespan of that battery.
Yeah, but Porsche's, I know that they're developing all their vehicles right now to roll out with this 350. They've been testing this now for a couple years. So they weren't going to go in at the slow charging rates. They've been perfecting their battery packs to take the fast charging rates.
Yeah, I'm quite bullish on Volkswagen. And, of course, Volkswagen is Ferdinand Porsche, right? The lineage of that. And so when I hear Volkswagen, I also think Porsche, right? Porsche.
Yeah,
I think
right.
The same thing, right? So because of their diesel emissions nightmare and the $12 billion they are still paying out because they got busted, and the U.S. executive who's now in jail, I think that they are putting everything they got behind batteries.
I mean, they're making a huge push of just building out all this infrastructure. They're going after it. So Tesla better watch out. It's got to up its game. By the way, Tesla's VP of Autopilot, chip guru Jim Keller, is leaving his job. He's going back to Intel. He was in charge of their autopilot program and in charge of helping design a lot of their own in-house chips. And I think it was this week, it was his last day. So back to Intel he goes, and they are putting Pete Bannon, a former colleague of Keller, and who was a chip architect at Apple, is taking over his role.
Gotcha. But Intel bought Mobileye, right?
Correct.
And Mobileye was the company that actually uses lasers and true distance radar to do terrain mapping. Is that correct?
Yeah, Mobileye's got some really hot technology out there, and Intel bought them. And what's interesting is now he's going back to Intel, and Intel owns Mobileye, and he was in charge.
So he's taking all the intellectual property in his head from Tesla that they couldn't do with cameras, and taking that to Intel, which has a true LiDAR company. That's probably going to work for Intel.
And remember, Tesla used to use Mobileye until
that was Autopilot 1.0.
Elon got in a feud with them and essentially said, "We don't need you. We can do it better ourselves." And Mobileye is eating Tesla's lunch in terms of what its capabilities are.
Yeah, no, you can't have 12 cameras do the work of terrain mapping. You can't do it.
No, if you want, there's inherent limitations just in cameras. So try a 12 camera system in autopilot when there's a heavy snowfall.
The human brain has had like 1 million years of evolution. How many years of evolution have we had with software? We were punch cards in the 50s. So, we're not, software is not even close to the human mind. I mean, you think it's easy to keep a car between two lines on the road, but when your software is making the decisions, you realize how hard that decision making is.
Mm-hmm. So that's the latest. It wasn't really Tesla bashing this week. It was just, hey, they've got to watch out because
they have no cars in inventory for demo. All their demo cars are sold now. So if you go to a shopping mall and in the parking garage, they used to have like 4 or 5 cars there, Model S, an X, maybe a decontented S. Not anymore. I think Elon is trying to squeeze every penny out of that company to put in the bank to make it look like he's having a good quarter, and selling every car he can.
Right, and did you see that? They're certified pre-owned, where they used to refurbish the cars?
Nope. What's going on?
Now
with
they're
that?
not refurbishing them anymore. Essentially, you buy a pre-owned Tesla. They used to really recondition them, make sure everything looked good, fix any scratches, any dings, anything. They're not reconditioning any of the cars again. And most of these are bought sight unseen, and they don't even put accurate photos of the cars up on the website. And a lot of people are getting their cars and saying, "What is this piece of junk?" There's scratches in the paint. There's the headliners peeled back. There's this. And I just spent $60,000 on this car, and Tesla's like, "Well, we don't recondition them anymore. It's your problem."
I bet everybody who has put together a reconditioned Tesla at Tesla is probably on the Model 3 line, pushing robots off to the side, just gluing panels on. It's like...
So my only thing is, if you're looking to buy a certified pre-owned Tesla, be careful. You should get accurate photos. You should actually try to see the car, because there's a lot of horror stories now because they're not reconditioning. I don't think they have the service bandwidth to even attempt to recondition, because so many of these Model 3s are ending back up at the service centers taking a couple weeks of repairs, and people just got them, and then they've died on the way home, and now they're back at the shop fixing them up all the time. Their shop bandwidth is very limited at their service centers, and it's being tied up. So they're letting other things go by the wayside. So be careful buying a certified pre-owned Tesla at this point, folks.
All right, thanks for having me again, guys. I am Bob Iacchino. I'll talk to you guys next week.
And I'm Mike Arnold. And have a good week. Thanks for listening.